What about on the fee side of things? Is there any variation with endowment in terms of fees? Is kind of
Mm.
what's normal in the industry versus what you're doing?
Well, so like any other DAF provider, there are expense ratios on investment opportunities. And so we are the same that way. And in fact, that's the way that our technology business makes money is they have a sort of markup on the expense ratio for every investment option. So if you're working with your advisor with a DAF SMA, that's a 25 basis point platform fee per year. If you're working with, where you're doing self-directed investing of the DAF assets and you're picking between traditional investments, we mark up, Spider and Vanguard and, also iShares, all sorts of different ETF products. And we generally add a platform fee of 50 basis points per year on top of that. And we're the only DAF provider that offers DeFi, so decentralized finance, on-chain money markets, borrow lend desks that offer increased interest rates compared to treasuries. Of course, we have traditional treasuries as an investment option, but we also have on-chain money markets as well. We also offer individual crypto asset investment with DAF assets. So you can hold Bitcoin, you can hold ETH, you can hold a number of other smaller market cap tokens in your donor advised fund. And those we charge platform fees of about 100 bips per year. But that is more or less the similarity between us and the existing market, where the investment products that are selected for the DAF are either issued by the underlying technology provider and are thus like their high cost basis investment products, or they're marking up somebody else's product. So that's one-to-one kind of apples to apples comparison there. And we basically have set up our fee structure to be competitive on that front. So if you look at like similar styled ETFs or similar styled pooled investments, you're getting a similar take rate as you would from Schwab or Vanguard or Fidelity on their DAF platform. But the big difference between us and the other DAF providers is that normally the nonprofit, the DAF sponsor, also adds an admin fee on top. And in traditional DAF sponsors, those admin fees are based on assets under management and charged on a quarterly basis on your average balance each quarter. And that basically means that the nonprofit who's been entrusted with taking possession of your charitable assets and distributing them to the nonprofits that you have, indicated that you want them distributed to, is incentivized to see the assets sit around in the account for as long as possible. And like, if we continue to play that out, there's kind of a flaw in the logic, which is like the nonprofit, not the investment product maker or the technology provider, but the nonprofit that is meant to be distributing the capital is now incentivized to actually not distribute the capital. Right. And that felt to us really backwards. And what's cool about making your own DAF sponsor is you get to kind of start from scratch with the fee model. So we said, okay, we're going to do a fixed rate fee model where when we get a job done for a donor, we're going to charge for that job done. And we're going to weight the relative amount charged towards us getting the end outcome that we hope to see in the world. And so we charge a tiered donation fee. So it starts at 50 bips for the first $250,000, and it scales all the way down to 5 bips at, $100 million gifts. So for very, very large gifts, we take a very small donation fee. And we have tiers for, different moments across that. So it's between 5 and 50 bips on the way in.
Yeah.
And then really we see ourselves at the nonprofit as getting the job done when the money leaves the nonprofit. So that's where we charge our administrative fee. We charge 100 basis points when money goes out the door. And that's to say that endowment.org, the nonprofit, is achieving its mission when money flows into communities and goes to organizations, not when a big donor comes and parks their $1 million and sits there. Right? The nonprofit sees no benefit to that donor coming and sitting on the cash and just it's sitting there. And that's like one of the biggest criticisms of DAFs. And so I think, beyond like why endowment for just its user experience, I think there's another answer to why endowment, which is also like get values aligned fee architecture as well as values aligned investment infrastructure as well.
So yeah, so to be clear, the money, small fee on the way in, fee on the way out, but when it sits, you're not hitting it every quarter with another AUM fee like some of the other providers are doing. So
Right. It's
yes,
we're charging bigger one-time inbound outbound fees that you amortize over the life of the DAF rather than charging an AUM fee every year on top of the fees that you pay for the investments
yeah,
that you're using. So we have the same investment fee architecture, right? But we are not doing an additional fee on top of that for administrative fees for the nonprofit just to reward them for sitting on cash
yeah,
for the
I
year.
like that.
And
Yeah.
that's a big differentiator that I think, you know, it's not the first thing people grok or understand. And it is certainly might be easier for us to just be like, we do it the same as everybody else. But I think for people, especially younger generations, for, Gen Y, for Gen X, for millennials, um, there's a deeper desire to understand the business mechanics behind the platform
Yeah.
and whether they are actually values aligned with what you're going for or if it's at all predatory for whatever reason. And so we're trying to build a new institution in the image of what we hope to see from future FIs, and that's how we landed on this fee architecture.
Well, to be honest, like I remember the first time we met, like first of all, the flexibility of what you can, put into the DAF and all the different asset classes and what have you, that was huge. But then also that fee structure like stuck out to us. So if somebody wants to contribute every year and kind of let it pile up and kind of build up, you're not hitting them every quarter. So to us, that was very attractive, and like one of the reasons, we partnered with you. So as I'm kind of wrapping up here, but so if an advisor wanted to get started, wanted to learn a little bit more, wanted to start, diving into this world, what's the best route for them to get more info?
Man, I would say take us for a test drive. Like you can make $1 gifts at endowment and make $1 grants at endowment, and it's 2 clicks away to open a donor advised fund and it's free to get started. So like you could be sitting on your phone at a stoplight and open up a DAF on endowment. And I think like that is always the best place to start is like try it and see if it's for you and see if you like it. And you can do that at endowment.org. The only thing that I'll say in case people are listening to this instead of looking at our link, we're spelled ENDAO, not DOW, DAOMENT.org. And if you want to go straight to the app, you can just go to app.endowment.org. If you have questions for us, there's a little chat bubble in the bottom right of any of our websites, and that goes to a real person and a bot at the same time. So you can talk to the bot that we've specially trained on all things endowment, and it knows a lot. Or you can just say, "Get me a person," and we're generally there pretty quickly. So happy to jump on the phone, happy to do a quick call, happy to do a video call where we're doing migrations together. But really. Whatever gets you over the action potential threshold of just trying us out is the right next step.
All right, fantastic. And I'm obviously happy to help as well. So for anyone watching that wants to reach out to me, I'm happy to provide an introduction to Robbie and his team. Um, so I think with that we'll be wrapping up our first ever video series to be named later. Robbie, again, thank you very much for kind of stepping up to be our first guest and being patient with the amateur host as he learns. And I think there's a ton of value with what you guys do. I think we're very proud to kind of be partnered with you guys. And like I said, like in terms of getting in this business to help people, like DAF is about the best example I can think of, really. So thank you very much. Any final thoughts before we close up shop?
No, real fun to be here today. Thanks for having me. And the feeling is mutual. We're really excited to work together with you guys and looking forward to seeing who else comes on yet another podcast video series with you.
All right. Thanks, Robbie. Thanks, everybody, for watching. We'll see you in the next week or two with another episode, I'm sure. All right.
Cheers. Thanks, everyone.
Thanks.